Hey, everybody. Welcome to another episode of Swan Signal Live. I am your host, Sam Callahan. I'm the lead analyst at Swan Bitcoin, a Bitcoin financial services company. We got a special show today with a great guest. But before we get started, I want to bring up our mining partner, which is Marathon Digital Holdings with the ticker name Mara. Marathon is the second largest holder of Bitcoin amongst Bitcoin publicly traded mining companies. Their mission is to enhance the Bitcoin network sustainably and increase the hash rate, increase the security of the most decentralized and secure monetary network in the world. So check out Marathon. They just did a really cool project with a landfill. Go check that out. I found that really fascinating. And secondly, this is your time to buy Pacific Bitcoin tickets, early bird tickets. You can get a full refund in February if you buy them now. This is the cheapest time to buy them. So go check out this QR code on the screen, lock in those cheap ticket prices, and go to one of the best Bitcoin festivals in the world next year at Pacific Bitcoin 2024. This episode, we're going to be talking about DCG and Barry Silbert, who has come into the headlines recently. SPF just got locked up for 7 counts of fraud. Could this be bigger? Could DCG, which is one of the largest, oldest companies, be enthralled in fraudulent activities? Right now, there's still questions that remain in terms of their guilt, but there are a lot of reasons to doubt some of the facts that were pushed on the public during some of the collapses that occurred in 2022. And now there's a civil lawsuit with the Attorney General of New York against Barry Silbert, Genesis, DCG, Genesis former CEO Michael Moro, and Gemini. And today we have Vijay Boyapati, who is the author of The Bullish Case for Bitcoin, as well as a senior engineer at Swan Bitcoin. Vijay, welcome to the show. You wrote a fantastic thread that broke down some of this very complex web between Genesis, DCG, Greyscale. I thought you'd be the perfect guest to come on the show, so thanks for coming on, my friend.
It's great seeing you again, Sam.
Yeah, and I guess it's a birthday, right?
It is.
So, happy birthday.
Thank you.
So I wanted to throw up a little former tweet from Barry Silbert. If Jacob, if you could throw that on the screen. There is a daisy chain of borrowers and lenders in the crypto space, most well capitalized, but some are not. Lots of leverage still in the ecosystem, including some non-obvious places. Important to understand counterparty risk and where are the weak links in the chain. That was June 2021, and maybe Barry knew, but we didn't know that daisy chain would lead all the way back to DCG and Genesis, his own companies. And so first, Vijay, what do you make of that tweet right there?
It's very ironic. There's also a tweet by Barry to Sam Bankrupt where he says, "It's my turn, Sam," and it might be his turn to join Sam in jail. Very serious allegations that have been made by the New York Attorney General. They're detailed, they're substantive, they're backed by a direct eyewitness who worked at Genesis. So it's very, very serious. Most people know the story of Sam Bankman-Fried now and what happened and how he was borrowing, his hedge fund Alameda was borrowing user funds from FTX and how they lost those funds and really why he deserves to be in jail. But not many people know about the story of DCG and Genesis, which I think is every bit, if not more important than the FTX story, because Genesis was a central part of the market and has been for a very, very long time. And its lending was really connected to all of these companies that we know have failed. BlockFi, Three Arrows Capital, all of these companies that went under. FTX as well was involved.
Alameda Finance.
Yep. Yeah, they were borrowing from Genesis as well. So they played this very crucial role in the market, but most people don't know about them because they mostly dealt with institutions and high net worth individuals. But they were really the only prime brokerage service in the market. And so they were relied on by all of these other institutions. So they're at the center of the story, but yet it has received very little attention from the media and in general. And I did a kind of deep dive on the New York Attorney General complaint, and looked at a whole bunch of public information that was available, and I summarized it. Also summarized historically, where do these companies come from? What's their significance? How do they relate to each other? And I put that in a long tweet thread, and I thought it might get some interest, but it really blew up. It's been viewed over almost 2 million times, and I think there's a lot of interest in. Well, this story seems significant. This is just as important and big as FTX, and maybe one of the oldest players in the space, the CEO of the oldest player in the space, he might go to jail as well.
Yeah, I mean, I think it's probably helpful if we go back and explain the origins of DCG. It's one of the oldest companies. It's founded in 2015, and it's basically a conglomerate. Like it invested in over 200 cryptocurrency companies. But really, that empire, the crown jewels of that empire, was Greyscale and Genesis. And he brought up Genesis being the kind of the blue chip prime broker. So they did all the lending to institutional investors. And then you have Greyscale, which has the Greyscale Bitcoin Trust. Can you maybe break down just a little bit further the relationship between those three entities?
Yeah, of course. So maybe we should step back a little bit more even than that and talk a bit about Barry Silbert, who
Okay.
worked in the finance space and had a successful company called Second Market, which he sold. And then he had a bunch of capital available and decided that the next big thing was Bitcoin and the crypto market. He's definitely done a lot of investing in crypto. Um, and he started with Grayscale, which created the first fund that made it possible for people to invest through their brokerage accounts and get exposure to Bitcoin. And the thing that's really interesting about this is the way this fund is structured is not an ETF. So the idea is that the fund would track the price of Bitcoin, but it wouldn't do this in a perfect way because ETFs have this redemption mechanism where if the price goes above the underlying asset, then there's a way to kind of arbitrage that. There's this qualified participants who can arbitrage that, and then the price goes back down to track the underlying assets. Grayscale's fund, GBTC, did not have that redemption mechanism. So they offered this fund back in, I believe it's 2013,
Correct. Yep.
when it was first created. And because there was such high demand to get exposure to Bitcoin, people were willing to pay a premium to the underlying assets of the fund. So to explain this idea, imagine that the fund had 100 Bitcoins under management. There would be an equivalent number of shares of GBTC to match those underlying Bitcoins, and it's multiplied by 1,000. So if there were 100 Bitcoin under management, then there'd be 100,000 GBTC shares available on the market. These shares traded at a premium to the underlying assets under management. So the total value of the shares was greater than the underlying Bitcoin in the fund. And the reason this was the case was that people were looking to get exposure to Bitcoin in a simple way. And GBTC provided them something that they could go to their brokerage account, go to E-Trade or Fidelity, and they could buy GBTC. And they were willing to pay a premium of 10%, 20%. And at one point, actually, GBTC traded at a premium of 40% to its underlying assets because there was such a strong demand to get exposure to Bitcoin. And a lot of people just didn't know how to, go to an exchange and go to a place like Mt. Gox in the early days or Coinbase later on and buy Bitcoin. So for those people, for the average regular investor, it seemed like a great way to get access to Bitcoin. But this premium, the value of the fund being greater than the underlying assets, created this arbitrage trade that was used by a lot of funds from, I would say, probably about 2018, 2019 onwards. It created this profit opportunity where I need to step back, and this is a little bit technical. I hope I didn't bore anyone, but the way that shares in GBTC were created is that you would give Greyscale Bitcoins, and 6 months later, they would give you the equivalent number of shares of GBTC. So you give them, say, 10 Bitcoins, and then 6 months later, they would give you 10,000 GBTC, which is the equivalent claim on those 10 Bitcoins. But suddenly, the GBTC you get back has a premium to the Bitcoins you gave to Grayscale.
Yep.
So there's this market opportunity where you can give them Bitcoin, and you can make this market neutral trade where you give them Bitcoin and you short Bitcoin at the same time. So you're market neutral. You don't care about where the price of Bitcoin goes. They give you back 6 months later the GBTC, which are worth more than the Bitcoins that you gave them. You cover your short, and you're essentially farming this premium. And if the premium is, say, 20, 30, or 40%, that's substantial. You're getting a lot of money back doing this arbitrage trade.
Yep.
And a bunch of companies recognized this was a huge profit opportunity. And one of these companies happened to be Three Arrows Capital.
Yep.
This hedge fund, which is fairly notorious now. They saw this trade and they were like, wow, there's a big profit opportunity here.
Yeah. So when people get Bitcoin or gave them Bitcoin, the shares would get locked up for 6 months, and that's when they would put on the short position, and then they receive the shares at NAV, at the price of the underlying. And if it's trading at a 40% premium, the shares, they just collect that difference. And so it's basically free money.
Exactly.
And
it was free money. That's a good way of thinking about it.
Right. And you could see a lot of these institutional investors did this. And BlockFi and Three Arrows Capital were some of the biggest ones. They were some of the biggest holders of GBTC for at one point in 2021, because they were putting on this trade and they're just rolling it every 6 months.
Exactly. And you can accumulate if you're doing 40, let's say maybe not the high point was 40%. Let's say you're doing 25, 30% twice a year. You can compound returns very, very quickly and make a lot of money. So these hedge funds and institutions that recognize this trade were making a lot of money in the early days. And it was a huge source of profit for Three Arrows Capital. It was their main driver of profit.
Yeah, and also, but let's talk about how there was also incentives for DCG, Genesis, and Greyscale really to put on this trade, because what happened was Three Arrows Capital and others started to put on this trade with leverage. And where did they get the leverage from, Vijay?
Yeah, so this is a good reminder. We need to step back a little bit again. And so we've been talking about Greyscale, and Greyscale offered this Bitcoin fund, which was GBTC. Greyscale was one of the portfolio companies of DCG, this parent company digital currency group that was created by Barry Silbert. Actually, Barry Silbert created the main players in this story, Digital Currency Group, which is a parent company, which he created to kind of mimic the corporate structure of Berkshire Hathaway. So it would be this holding company that held ownership shares in a lot of companies in the crypto space. And the other company that it was a portfolio company was Genesis. And Genesis, as we've mentioned previously, was a prime brokerage service, which meant they offered derivatives trades, spot trading, and lending. And so the way Genesis worked is that they would borrow Bitcoins and dollars from investors, and that they would lend those Bitcoins out to people who are making trades on the market. And they would borrow at, say, 5%, and they would lend out at, say, 7 or 8 or 9%, and they would keep the spread, and that would be their source of profit. And they were enormously profitable especially in 2020, 2021. They were making billions and billions of dollars, and they had billions of dollars of assets under management. So Three Arrows Capital, we were talking about this hedge fund which recognized this arbitrage trade. They turbocharged this trade. They were not just trading their own capital. They were going out and borrowing Bitcoin to make this trade, to add leverage to this trade and to make even more money. And who were they borrowing from? They were borrowing from Genesis. So Genesis, just to put this in context, was a sister company of Greyscale. So they're both, Greyscale and Genesis are both child companies of Digital Currency Group, or DCG. So Three Arrows Capital is going to Genesis, borrowing Bitcoins that come from Bitcoin holders who wanted to earn interest on their Bitcoin. And then it's going and using those Bitcoins to supercharge this arbitrage trade. Now, there's a huge conflict of interest here. You can, see it pretty clearly. There's these sister companies, and by lending Bitcoins that come from Bitcoin holders to hedge funds that then trade this arbitrage trade, those Bitcoins flow into Grayscale. And because Grayscale was a trust and not an ETF, those Bitcoins go into Grayscale, but they can never come out, and they're stuck at Grayscale.
Mm-hmm.
So this is how Grayscale got an enormous number of Bitcoins under management. So GBTC, their fund, has over 600,000 Bitcoins under management, and Grayscale charges a ludicrous 2% a year fee for doing essentially nothing. There's very little work involved in managing this fund. It's just custodying those Bitcoins and not moving them ever. They charge 2% on over 600,000 Bitcoins. So Grayscale is making 12,000 Bitcoins a year in fees. So you can see already there's kind of a conflict of interest here where, as a parent company, DCG, you want your child company, Genesis, lending to players in the space that are doing this arbitrage trade, because the arbitrage trade is pushing Bitcoins into Grayscale. And the more Bitcoins that Grayscale has under management, the more fees they collect, and those fees go up to DCG. Now, I just want to back up one more step. Why did this trade exist at all? Well, who is the source of this big profit opportunity that existed in the market? It's the SEC. The SEC massively failed investors by not providing them a safe, easy ETF mechanism for getting exposure to Bitcoins.
Correct.
All investors had was this crappy trust structure which couldn't properly track the price of Bitcoin. And because there was so much pent-up demand in the investing public to get exposure to Bitcoin, it created this premium that could not be fixed by the regular ETF market mechanism. So ultimately, the fact that this trade occurred and that it spawned so much gambling and leveraged trading is the fault of the SEC. That's where we need to go back. Of course, the leverage and the eventual fraud that happened can be blamed on the individual players who were responsible for that. But the fact that this opportunity was created is entirely on the SEC.
Yep. If the ETF conversion would have been approved, premium trade wouldn't have existed in the first place. If that didn't exist, these firms wouldn't have grown to the size they had. The leverage wouldn't have got to the size it had, and that mess could have been avoided. I think it's important to talk about how when you have a parent company and you have these subsidiaries, the idea is that they have separate management teams and that they don't work together. But in this case, it seems like there was a lot of, let's say, overlap between the management decisions that was kind of revealed in the NYAG's lawsuit against these entities and these individuals. For instance, Barry Silbert was the CEO of Greyscale up until January 2021. Also, Genesis was the only authorized participant of the Greyscale trust up until October 2022, which means they were in charge of issuing new shares, and only them, and kind of selling them to investors. And so that was cut off in October 2022 when Grayscale bought that in-house. And it's all about incentives here. And I think that's what we were talking about. See, Genesis makes money the more loans it gives out. And if they get loans and they know that these figures are going to put on this arbitrage trades with Grayscale, they know that Bitcoin is going to eventually end up in the Grayscale trust, which all benefits DCG, the parent company. And so they're kind of working together where Genesis is feeding the leverage into Greyscale. That Bitcoin goes into Greyscale, like you said, doesn't come out. It increases the assets under management, increases the fee that DCG ultimately gets. And so that was their big cash cow as well. And I think it's just so important to talk about how they're supposed to function separately.
Yeah, absolutely. And Barry publicly claimed several times that these companies acted in an arm's length manner. And what he was claiming is that these companies, when they interacted with each other, essentially did it as if they were not sister companies. It was just interacting with any other company in the space, which is just patently false. There was information available to them that wouldn't have been available to other companies. For example, Sonashine was aware of the business relationship between Genesis and Three Arrows Capital. He knew that there was these loans happening, these enormous loans that were increasing the assets under management of his company.
Yeah, he signed that loan, right?
He signed a document that showed that he knew about this business relationship. And just to add to what you were saying before, Barry Silbert was on the board of Genesis Trading, I believe until July 2022. So he was on the board of Genesis Trading from 2013 to 2022, mid 2022. Genesis, I should also say, Genesis is an interesting company. It actually had two internal companies. Like legally, there were two parts to Genesis. Anyone who used Genesis may not have known this. It looked like one company, but there was Genesis Trading and there was Genesis Lending. And although they were legally separate companies, they shared office space. Till I believe in 2022, and when the board was created, it was two of the three members were from DCG, so it was definitely not an independent company. It was not running independently.
Yeah,
it was certainly tied to its namesake, Genesis Trading, which was controlled by Barry. So this is so incestuous when you think about how these companies were interacting with each other.
Yeah. And like the one thing that I found was shocking was, so Genesis, they always said that they were like over collateralized. So they basically had some of their clients basically would have to post like above 100% collateral. But what was discovered was that there was the same rules for everybody, right? So like Three O's Capital, for instance, was able to borrow an obscene amount of $2.3 billion to put on various trades. And the collateral that they received, not only was it under collateralized, but it was like GBTC itself, as well as like coins like AVEX token and NEAR token. And so they accepted these coins that eventually lost like 80% of their value in the bear market. That was the collateral they accepted from these larger hedge funds, whereas other clients had to put over collateralized for their loans. And then also DCG itself took on loans from Genesis, and they were completely unsecured. So they didn't have to put up any collateral. And so there wasn't the same rules for different players. And when Three O's Capital did that, it was such poor risk management. It's crazy to think about how they gave one counterparty a loan of that size with that collateral. And the one little detail that I'll say as well is basically when Three O's Capital put on this GBTC arbitrage trade, they basically had to hold those shares for 6 months and they would be illiquid. But what they did was that's what the collateral they used to get even more Bitcoin to put on the trade more. And so Genesis just accepted the GBTC back as collateral. Now that's a problem because Genesis is an affiliate. And so what that means is there's a rule called Rule 144A, which makes that position extremely illiquid because they couldn't sell all that for cash because there's a rule in place where if you're an affiliate, you can only sell about 1% of the average weekly trading volume, or I think 1% of the outstanding shares, either or, at a time every month. So or every quarter. So they're completely restricted from selling those GBTC shares that they received as collateral.
Yeah, that's an incredibly important point that you just made there. And this is not the kind of risk management you'd ever do unless there was an underlying conflict of interest. You would not, if you're making a loan to someone and you're taking collateral to protect that loan, you would want that collateral to be deeply liquid, and you would want the ability to sell it. If you take GBTC as collateral and you have a regulatory prevention for selling that capital, you put yourself in an enormous risk. And that's what happened. They lent over $2 billion to Three Arrows Capital. And maybe we can continue the story about what happened with Three Arrows Capital.
Yep. Let's
Yeah.
do it. Let's do it.
Yeah, so this trade existed for several years, this premium trade, but eventually it went away, and I think it was in 2021. I can't remember. I have it in my thread. I don't remember the exact.
I say it's February. I think 24th is when the premium disappeared.
Yeah, I have it.
It's a day that will live in infamy. That's what
Yeah, I have it here. February 23rd, 2021. That was the first time that the premium on GBTC went away, and it's never come back. And in fact, the premium turned into a discount and got as low as 48% at one point, which meant that you went from the fund being worth more than its underlying assets to being worth less than its underlying assets. So at one point, it was only worth half of its underlying assets. So firstly, why did that happen? It happened because people got new ways to get exposure to Bitcoin in their brokerage accounts. So for instance, you could buy MicroStrategy. MicroStrategy is almost like an ETF on Bitcoin because their company is the actual functioning business of MicroStrategy is worth fairly small amount relative to the amount of Bitcoin that they hold. There were futures ETFs. It just became easier to go and buy Bitcoin. You could do it.
There was also the new the Toronto Stock
right?
Exchange like spot Bitcoin ETF, as well as different Bitcoin trusts with smaller fees. They all hit the market, whereas GBTC kind of was the only game in town for a long time. Now there's a lot of different options for people that were really attractive.
Totally. So there are all these different options that people could use to get exposure to Bitcoin from their brokerage account. Ironically, even though the people had these options and there was competition for GBTC, that doesn't change their assets under management. They still have those assets under management. Those Bitcoins are locked in GBTC. There's no way for them to get out. They're trapped. It's like a Hotel California. You go in and you can never come out. So anyway, so this is the part of the story. The GBTC premium disappears on February 23rd, 2021. And so this massive cash cow that all these institutions like Three Arrows Capital were using, this arbitrage trade, essentially disappears overnight. And so they have to look for other profit opportunities. And Three Arrows Capital went and found another one, which was the Terra Luna carry trade. I don't want to go into too much to the details of how that carry trade worked. Suffice to say, it was kind of this stable coin which didn't really need any external intervention, but it was kind of a Ponzi scheme. And in 2022, that imploded in a matter of days. The entire ecosystem, this stable coin, went from having a value of, I think it was 40 billion, something large like that, to
wiped it out
over 3 or 4 days. And Three Arrows Capital was deep in this trade.
Well, they had to replace the GBTC trade, right? They
had to replace
and they just went to a riskier, yield, and like that was the whole thing with Terra Luna. You can get free 20%, and Terra Luna was like, oh great, we can replace the GBTC trade with this. And then it blew up in their face. And they took leverage from everyone to put out, like Voyager, Celsius, obviously Genesis, what we talked about. And once that Luna trade blew up on Three Arrows Capital, they brought down all these lenders with them. Like that's kind of what I found, which was just crazy, right?
Yeah, absolutely. So Three Arrows lost the profit from the GBTC trade, and they went over to the Terra Luna trade, and then that imploded over a series of days in early 2022. And so Three Arrows Capital became insolvent. They were wiped out. They lost essentially all of the money, I think, that they had under management, except for some assets, like they bought a yacht or something like that. They lost almost all the assets that they had under management. And if you were Genesis who lent to Three Arrows Capital, if you had good risk management, you would have good collateral in your possession, and you would see that this trade is failing. you would take possession of the collateral and you would be fine. That's how good lending and risk management works. They had awful risk management, and you highlighted this, Sam, when you said they took as collateral something they couldn't even sell.
Right.
Just
The
risk
GBTC.
management 101. You do not do that. So the failure of Three Arrows Capital put a huge hole in the Genesis balance sheet of $1.2 billion. And this is where the fraud begins. So Genesis now has a hole on its balance sheet of $1.2 billion. And it's borrowed money from all kinds of people, Bitcoin holders, institutions. Lots of different people gave them money. Gemini gave them money. Gemini is an exchange which had something called an earn program, and you would put your Bitcoins in their earn program and you would earn an interest rate. Where did this interest rate come from? They were just giving those Bitcoins to Genesis, and Genesis was providing them the interest on this. So that caught up retail investors because Gemini had a lot of retail customers. So if at this point, after Three Arrows Capital blew up and Genesis has a $1.2 billion hole in its balance sheet, if its lenders, the people who had lent capital to Genesis, said, I want my Bitcoin back, they would not have been able to provide Bitcoin back. They didn't have the capital to meet all of the redemption requests if those came in. So what did they do? They hatched a plan. The CEO of Genesis, Michael Moro, and Barry Silbert, the CEO of his parent company, DCG, hatched a plan together. And they created this thing called a promissory note, where DCG said, we will fix this problem, this big hole that you have in your balance sheet, by giving you an asset that covers the hole. And it was the asset that they gave Genesis had a face value of $1.1 billion. But the big caveat was that it wasn't really worth $1.1 billion. It was this kind of completely illiquid asset which could only be redeemed after a decade and paid below market interest rates. I think the interest rate on this promissory note was like 1% or something like that.
Yep.
So if you take something that can only be redeemed for a decade and has a very low interest rate, what's its actual worth? It's worth very little. But the CEO of Genesis goes on Twitter and claims, we have thoughtfully mitigated the problems in this Three Arrows, implosion, and we are in a good position to continue servicing our loans, and the spot trading business at Genesis is also fine. And he went out and he reassured the public and lenders to Genesis, hey, don't worry, everything is okay. This is totally fine. And so they didn't face a run in June 2022. They didn't have this mass exodus of lenders and clients to their business saying, I don't want to keep my money with you guys anymore because I don't trust you. Their business continued to function. Mm-hmm. What happened was they papered over this loss. There's a huge hole in their balance sheet of over $1 billion, and they papered it over. And the thing that's most shocking, this is definitely fraudulent behavior, to paper over a loss like this and go out in public and tell people everything is fine. The thing that's really shocking is immediately after papering over this loss with their parent company, with Barry Silbert, DCG then borrows 18,000 Bitcoins out of Genesis. It takes all of their liquid assets. It gives them a piece of crap paper that isn't worth anything, and then pulls out all of the Bitcoin that Genesis has on its balance sheet for itself to use to do this carry trade. It's just shocking that they would think this was okay, that they could do this. They were essentially using Genesis as their piggy bank. DCG was using Genesis as their piggy bank, and they did it in a fraudulent way because they were telling the public everything's okay. We've filled the hole in the balance sheet. They have enough capital to operate, and behind the scenes, they're taking all of the liquid assets out of Genesis.
Yeah, so I mean, alleged fraud. Let's just say that, alleged fraud.
Yes, they have not been convicted, but this looks incredibly bad. Let
me try to summarize a little bit. So Three Arrows Capital blows the 1.1 billion out. Now they do the 1.1 promissory note, And like you said, it's not paid back until 10 years later. It's very illiquid, but it's like an accounting trick because they counted it as a current asset on their balance sheet. And that's when a current asset's defined as one that can be reduced to cash within a year. That's what the accounting, definition of a current asset is. And that obviously wasn't. It's not till 10 years later. And so it was a balance sheet problem. Like it was an equity problem for them. Like it got blown out, but they were pretending like it was just a liquidity problem. That, hey, all these people needed money. They got spooked during 3O's capital. There's a lot of withdrawals. But we have a lot of loans that are longer, and there's a liquidity mismatch here because our loans don't mature till 6 months and 12 months. So we just don't have the liquidity right now. But our balance sheet's fine. But really, it was just papered over by this 1.1 promissory note. And just to recap what you said, it's so important because the parent company, as they were going through a so-called liquidity problem, they were sucking liquidity out. So they were basically taking on these big loans that were unsecured. So DCG was taking $100 million loans and even more, like you said, 18,000 Bitcoin, and they kept extending it. Like they weren't paying them back. And so just when Genesis needed more liquidity, their own parent company was sucking the liquidity out of them, which just makes you raise your eyebrows and be like, what is going on here?
Yeah, it's really shocking when you think about what happened. But so this is June 2022. They paper over this loss, but the stuff that you're talking about happened a little bit later. So they keep operating and they continue to operate until November 2022 when the FTX collapse happens. And the story there is interesting in and of itself, but I think people are a bit more familiar with that story. The CoinDesk article comes out that Alameda has all these FTT tokens on its balance sheet, and people panic. Users of FTX panic. They withdraw their funds, and within a few days, FTX goes out of business and goes into bankruptcy. This also triggered a panic at Gemini. Gemini is another exchange. It triggered a panic across the entire ecosystem. People wanted their Bitcoins off exchanges because they're like, FTX, this is the biggest, safest exchange. It's gone bankrupt. Why would I keep my Bitcoins on an exchange? Which is a great question for everyone.
Yeah.
Do not keep your Bitcoins on exchange. If you have not learned from this lesson by now, then I don't know how to save you. So FTX goes bankrupt. Customers of Gemini panic. They try and pull their Bitcoins out of the Earn program. And this is what finally triggers the collapse of Genesis. Genesis does not have assets on hand, liquidity to meet customer withdrawals. Because as you pointed out, Sam, DCG pulled all the liquidity out of Genesis. And they were insolvent from June. It's just that they papered it over and kind of tried to convince the public they were fine. But when Gemini's customers pulled money from the Earn program, Gemini had to go to Genesis and say, we need to end this Earn program. We need to get all our Bitcoin back. And that's when Genesis was forced to pause withdrawals. They froze withdrawals in mid-November, I think November 16th. And then 2 months later, they had to declare bankruptcy because it became clear eventually that they didn't have the liquidity. They didn't have the funds. It wasn't just the liquidity. They were insolvent. They didn't have the funds to pay back their loans. And it became clear to people who lent money to Genesis that they were only going to get a fraction of their assets back, unfortunately, a fraction of their Bitcoins back.
Yeah. It's just like even like the counterparty risk that we talked about, the poor risk management. The reason FTX affected Genesis so much too is I think 60% of their loan book was concentrated to Alameda, and most of the collateral was the FTT token. So that's the kind of risk management we're talking about with Genesis. And I just have to go back to this because it's like DCG, its subsidiary is going through a liquidity event in the wake in like weeks after 3Arrow Capital's downfall. And then they basically, Genesis lends DCG 18,000 Bitcoin worth $355 million. And this is after DCG failed to repay hundreds of millions of dollars worth of loans. They took out an additional 18,000 Bitcoin. And then during the FTX collapse, DCG partially repaid that loan of 18,000 Bitcoin with shares of GBTC. So that just worsens the liquidity problem because, like I said, like basically DCG took Bitcoin and gave back GBTC to Genesis, and Genesis can't sell the GBTC because of the securities rules. So they just worsened the liquidity issue even more right when FTX was collapsing. And you just have to think, like, why? Like, why did they have to do that? And to me, it's only because DCG needed it. Like, they couldn't repay back their loans that they were taking back from Genesis,
Yeah.
unsecured loans, and they just kept extending and extending. And despite Genesis going through troubles of its own, DCG was just basically robbing the piggy bank, so to speak, because they could at these really favorable market rates that were under the market rates, actually.
I think you really nailed it, Sam. The question is why in June, when Genesis became insolvent, why did they not just declare bankruptcy? That would be the correct thing to do. You're insolvent, you can't pay back loans if people want to withdraw their funds. You declare bankruptcy. The reason they didn't declare bankruptcy is because that would have caught DCG up in this whole mess because DCG had loans from Genesis. So instead of doing the right thing, they papered over the loss, they tried to reassure the public, and then they drained all of the liquidity out of Genesis and up into DCG. Just absolutely shocking behavior. And the fact that this hasn't received as much attention as the FTX case, I think is much more important because Genesis played a central role in the market. I think this has been a huge failure of the financial media.
Yeah.
Both because the hard questions weren't asked. This was true of FTX too, where people just kind of bought whatever Sam Bankman-Fried said. But I think it's even worse in the case of Genesis and DCG because they played such a central role in the market. It's been clear since the New York Attorney General filed this suit that something very untoward was happening at these companies. And you could probably also tell by other signs. If you were paying really close attention, Michael Moro was forced out of Genesis, or he jumped ship a little bit after they did this kind of fraudulent promissory note. And then a few months later, Larry Summers, who was an advisor to the company, also left the company. They probably had an inkling that this was not going to end well, that something very fishy was going on. And of course, now Michael Moro, the former CEO of Genesis, has been caught up in this lawsuit by the New York Attorney General. The financial media really needs to look at itself and have some accountability and say, we were not asking hard questions and we were not following up. It's really only independent journalists who are not working for any of these big corporations who've been asking the hard questions and poking and prodding and saying, is this legit? Are you actually solvent? Can you pay back your loans? And so this is a real problem for the public in general. They trusted these companies. Genesis was always thought to be the adult in the room. This was the general consensus in the market, was that there are all these shady companies out there, Celsius and Voyager, run by shady people. But don't worry, Genesis is the adult in the room. They have good risk management. They know what they're doing. They only lend and borrow from large institutions. But the truth is, they were every bit as degenerate as any one of these other companies that gambled user funds. And so I think they need to face the same level of scrutiny and accountability and ultimately punishment that any of these other companies faced. If you look at the evidence, which I think is damning, Barry Silbert should be in jail with Sam Bankman-Fried. How this plays out, whether it becomes a criminal case or not, is going to be very interesting over the next few months, because the complaint from the New York Attorney General is civil, which means she is seeking damages. Letitia James is the Attorney General there. She's seeking damages, and she's also seeking to ban DCG and Gemini operating in New York, which is essentially a death sentence for those companies. If they cannot operate in New York, they will die. But the question is whether the Southern District or the Eastern District of New York follow up with criminal charges. I expect they will. I think the number of people who have been harmed by this, I think it's over 200,000 regular retail investors have faced loss of funds. The losses are enormous. A lot of people have been caught up and affected by this.
Oh yeah.
I think this case is going to go criminal, and I think there's a good chance that Barry, Silbert, and Michael Moro end up in prison.
Well, even in the Gemini Earn program alone, there was 232,000 investors with more than 1 billion in losses right now. It's currently, I think the case is now going to go to litigation. They were trying to come out with some deal, but now it's likely to go to litigation. But I agree with just like if you look at the tweets and how they publicly represented their financial condition as healthy and that they filled a structural hole, when now we know that wasn't the case. That's where I kind of, look at this and I'm like, okay, that wasn't true. Like just on a factual basis, now that we know that FTX collapsed, they weren't healthy, that didn't have a healthy balance sheet. That was falsely represented publicly to reassure investors to prevent some kind of bank run from happening. And this is usually what happens when there's fraudulent activity. It's when people are desperate, right? When things are falling apart. Maybe these are good people, but you just kind of panic and you instead of doing the right thing, the hard thing, you try to keep it going. You try to extend and pretend. And I think
Yeah, it's a question of moral compass. My view is whether you have a moral compass or not is at those points where you have to make really hard decisions. If you don't have a moral compass, then you're just going to do the thing which is easier,
right.
and that's what happened with Sam Bankman-Fried. And I think you're absolutely correct about the statements they were making. I think the statements that Michael Moro was making, they're still public
Still
and
there.
available on
Yeah, you can
Twitter.
go look at them.
Yeah, you can find them in my tweet thread, but they're the equivalent of Sam Bankman-Fried saying FTX is fine, assets are fine. No, they definitely were not fine. And Michael Morrow saying that we have thoughtfully mitigated the losses of one of our partners, also false. You did not thoughtfully mitigate it. You papered over the losses. You did not inject new real capital into Genesis to make yourself solvent. You hid the losses, and then you gave all of your liquidity to your parent company. So yeah, this is total misrepresentation. It's the kind of thing which is a felony.
Yeah. And now, these creditors, I mean, it's just a mess to have your Bitcoin tied up in these bankruptcy proceedings. They can last such a long time. They're expensive. One of those independent journalists that's done a good job is Laura Shin. I don't know if you listened to that one with the two Genesis creditors, but I happened to listen to it. Very fascinating. And one of the things I found most fascinating was there's a lot of debate of how they'll get paid out because they lent him a Bitcoin or, 10 Bitcoins, whatever it was. And when Genesis declared bankruptcy, the price of Bitcoin was around 21,000. And so will they get paid back in cash? Or will they receive a Bitcoin? Because obviously Bitcoin's ripping right now to 37,000. And the Genesis creditors are going, no, we want Bitcoin. We gave you Bitcoin. We want Bitcoin back because of the price appreciation. We don't want $21,000 in cash. And to me, it's just like, this is exactly why self-custody is so important. You can't trust your Bitcoin with these entities who turn around and bet with it and had terrible risk management. I mean, now they're just have to basically hope that they'll get paid in kind in Bitcoin. Probably not 1-to-1 after all these bankruptcies happen, and it's just a mess.
Yeah, that's such an important point that I don't think many people understand, and I think is a lesson for anyone who's considering lending Bitcoin. If the company that you're lending to eventually goes bankrupt, when they file for bankruptcy, your claim is dollarized, which means that you can only claim the dollar value of your Bitcoin at the time. So Genesis went bankrupt, like you say, Sam, when Bitcoin was around $20,000. It's now $37,000. So Genesis can actually claim, if they pay back people $21,000, that they've settled that claim and they don't need to give back the Bitcoin, even though the contracts with their lenders was for returning Bitcoin. People lent Bitcoin with the expectation they would get Bitcoin back, because if you don't get your Bitcoin back, you create this enormous taxable event. It's the equivalent of having sold your Bitcoin. So no one wanted to do that. So now in bankruptcy, the really shocking thing, Sam, I don't think many people fully appreciate this, is it might be possible for Genesis to become solvent again. which is just unbelievable and nauseating to think that they had GBTC on their balance sheet. They had a lot of GBTC on their balance sheet. And GBTC is going up and could potentially be approved by the SEC as an ETF, which I really think the SEC should not do that, given the amount of fraud that was involved with these sibling companies and how the assets under management in GBTC was inflated so much because of the lending from Genesis. But so Genesis has GBTC on their balance sheet. It's gone up enormously over the last few months. But the claim value of the people who lent Bitcoin to Genesis is pegged at this dollar value of $21,000. So Genesis could conceivably, if Bitcoin continues to go up, say, hey, we've paid back all these lenders.
Yeah.
We paid them back $21,000 per Bitcoin. And now we have all this excess value because GBTC has increased so much. They could go back and start functioning as a business and having screwed all of these people. Say you lent 10 Bitcoin. In fact, what you get back from Genesis is the equivalent of 3 Bitcoin in dollars. Imagine that, how painful that is. And a similar thing happened in the Mt. Gox bankruptcy in 2013, where Mark Karpeles there was like 600,000 Bitcoin in the bankruptcy, and people's claim value was pegged at the value when the bankruptcy happened. Then Bitcoin went up, 1,000x after that. Mark Karpeles could have said, "Oh, I'll just pay you back the dollar or yen value of your claims from when the bankruptcy happened," and kept all the other Bitcoins, the hundreds of thousands of Bitcoins. But he was not so insane to try and do something like that. He said, "No, I will give back everything because these are the assets that really belonged to the creditors of Mt. Gox. I'm going to give it all back," which is pretty smart, right? If he had kept those Bitcoins, he would not have been able to live feeling safe for the rest of his life. So it'll be very interesting to see what Genesis does in this case. Are they going to try and keep the excess value that really belongs to creditors, or are they going to say, "Hey, this is not ours. This is definitely yours," even though the U.S. bankruptcy law pegs the value that you can claim to when the bankruptcy was filed? These assets should go back to you. It'll be really interesting to see how they handle this.
Yeah, if there's one entities that benefit from this price rise that we've experienced over the last couple of months, it's DCG and Genesis, who own a lot of GBTC. That's what DCG was borrowing money from Genesis that they haven't paid back their loans yet, but they were just buying GBTC, a lot of it with it, because the discount was falling out so much in 2022. And they wanted to improve that. So they were trying to basically go in there and buy GBTC to stop the free fall of the discount, because it's not attractive to investors to buy something at a massive discount unless you're doing some kind of arbitrage trade. And so they basically owned almost 10% of the GBTC at one point, DCG. And so they benefited from it going up 200+% this year at a time when there's a lot of expenses going on for them legally. And you just have to think in terms of this ETF conversion, whether that's going to happen. Like, I got my thoughts, but you said that you don't think the SEC should do it. What do you peg the odds that it will, though? Like, how will this play out in terms of the odds of the GBTC getting converted? Because obviously Grayscale just won that lawsuit against the SEC. But on the other side of the fence, you have DCG currently in this whole separate civil lawsuit, the parent company of Grayscale. Do you see that affecting things in terms of Grayscale's approval?
I think there's a pretty good chance that an ETF will be approved. I can't speak to exactly how the SEC is going to treat Grayscale and the approval of GBTC. Grayscale could argue, "Hey, we were a sister company, we're not involved in that," but really that's nonsense if you look at how closely tied these companies were. I think if the SEC does its job, it will approve the other ETFs, but will block Grayscale's ETF, and will say there's too much of a pull over this whole business here because of the amount of interactions between these companies, the assets under management coming from loans that were fraudulent. We need to see how how the litigation against DCG plays out before we'll even consider approving GBTC. I hope they don't approve GBTC. I think that would be a really bad sign to the market and to the public in general, that it's okay to get away with fraud and to build up this huge business based on fraud. I do hope they approve some of the other ETFs, but I think given how many people have been harmed in this massive mess that was caused by DCG and Genesis and how it benefited Greyscale, I really think they should be careful about approving the ETF for Greyscale.
Yeah, it's important to note that there's always like real victims to these white collar crimes, and my heart goes out to those investors right now that has their funds and their savings trapped in these things. Genesis might benefit from the price appreciation, but I don't see how anybody trusts Genesis Capital again after this. Maybe the trading arm survives.
I think it's shut down.
It is shut down. Yeah. And I don't know, Gemini, same thing. Like, I don't know how you trust it. We didn't even get into Gemini, but there was a lot of negligence there, let's say, and kind of misrepresentation.
I can make one comment about Gemini, Sam. I know we're getting close to the end of the interview, but Gemini had a sense that the credit quality of Genesis was pretty poor, and they knew it early. Triple C, they rated Genesis as triple C, and they wanted to get out of this earn program. They were like, this is kind of scary. They don't have a good credit rating based on the loans that they're making and based on their portfolio. So they went to Genesis and wanted to pull out, but Barry had a meeting with the Winklevi twins to reassure them that, no, it's okay, but also you can't really pull out because we don't have the funds to pull out to allow you to pull out. So they kind of had some inside information of what was going on, and this is why they've been pulled into this New York Attorney General civil suit, because the Attorney General is alleging that they knew enough that they could have protected their customers and pulled out and made those customers whole, but they didn't. So this is really the source of why so many people, so many retail customers have been burnt by Genesis, is Gemini's earn program brought all of their capital over to Genesis.
Yeah, and it was the only counterparty they used for that entire earn program. And they kind of knew about this. They knew about the concentration of loans at Genesis. They rated it a triple C, which I think meant that in an economic downturn, it had like a 40 to 50% chance of defaulting in terms of Genesis. And Gemini knew that, but they didn't disclose those risks to the public or their customers. They, publicly said it was liquid and safe, and they did due diligence. And at the same time, in meetings, they were talking about how they would protect themselves. And there was even like risks. People who worked at the risk department in Gemini removing their own funds, their personal funds from the earn program, while they were saying something very different to their clients. So, yeah.
Can I make one extra point related to this?
Go on. There's we don't have a hard stop or anything.
There's another wrinkle in this, which was the loans that Gemini was making using its customer funds from the earn program to Genesis. They took collateral for those loans, and guess what the collateral was? GBTC. They took GBTC as collateral, and interestingly, they took possession. They foreclosed on a loan to Genesis by taking possession of that GBTC, but they never used that GBTC to pay back customers in the earn program. And the GBTC, when they said they foreclosed on it, was worth 250 million or so. It's currently worth, I think, somewhere around 800 or 850 million. And the claims from the Gemini earn customers are worth about $1 billion. So Gemini already has essentially enough to make their customers whole. And so this is a big question. Like, you had collateral, you took possession of the collateral from Genesis. That collateral is now worth a lot. You could use that to pay back your earn customers. Why have you not done that? It's a very interesting question, and I'm sure people who were customers of Gemini who had money in the earn program are wondering the same thing. When are you going to pay us back? You have the ability to pay us back, but you have not done so yet.
Yeah, it's very interesting. I wonder what that reason is. The one thing I think about in terms of the ETF and the likelihood of a conversion, um, is, DCG could need some liquidity to pay for all that. Obviously, they're not in great financial shape. I mean, I don't know what their balance sheet looks like, but the fact that they couldn't pay back any of these loans, they essentially defaulted to Genesis, over $600 million worth of loans to them. They couldn't pay it back, or they didn't want to, one or the other. And so if they need liquidity, maybe they sell the trust. Maybe they sell the trust to another sponsor. And
Why didn't they do that? Another great question, Sam. They have the assets. They have valuable assets that could pay back the people who are owed their money.
yeah,
But instead of paying back the loans, the way you pay back the loans is you say, I have these assets like Greyscale that are worth something. I will sell the assets and I'll use that liquidity to pay people back. They don't want to do that. They want to hold on to Greyscale because they consider it like their crown jewel, their cash cow.
it is.
It definitely is. So they don't want to get rid of it. So instead of like paying back the people they owe, they defaulted on their loans. They had loans due in May, and Barry Silbert, had a lot of bravado to go on Twitter and say we've never missed a loan payment. When the Winklevi said, you owe us money and it's coming due in May, he was like, DCG has never missed a loan payment. Well, they missed that one. They defaulted on that loan, and unfortunately, Genesis is in bankruptcy, and that money is owed to Genesis and then to Genesis customers. But Genesis, in the bankruptcy process, could have filed a motion to say, give us that money now. We need that money now.
Mhm.
Instead, what they did was they gave DCG forbearance. They gave them even more time to pay back their loans. And so this conflict of interest seems to have continued even into bankruptcy, which is even more shocking because Genesis in bankruptcy has a legal fiduciary duty to pay back its creditors. Yet even in bankruptcy, it's still doing stuff that's beneficial to its parent company and is harmful to its customers.
Man. Yeah, I mean, it would make sense too if it was, the trust was sold just because they need liquidity if they did that. But also I could see a lot of people wanting that. I mean, 3% of Bitcoin's supply is locked up in that trust right now. It's very valuable. And right now they collect 2%. But say if one of these ETF sponsors, like a BlackRock, if they got this trust, it's like getting 600,000 plus Bitcoin, that they could probably get a better market price. Because if they tried to buy that and seed that ETF, there's only like 1.7 million Bitcoin available on exchanges. If they go in there and try to buy hundreds of thousands of Bitcoin to seed the ETF, they're going to jack up the cost basis on themselves. And so they want to find this like honeypot of 600,000 Bitcoin that they can just acquire in one fell swoop. And so it makes a lot of sense. And then if you're the SEC, well, you like that BlackRock is in charge of those Bitcoins rather than Greyscale with all this shady behavior. So maybe that is what leads to like a more likelihood of a conversion if it's under a different sponsor, more credible sponsor with a BlackRock over Greyscale.
The underlying point that you're making, which is I think very important, is that Greyscale is enormously valuable. It's worth billions and billions of dollars.
Mm-hmm.
And DCG has that value under its control. If it wanted to pay back the loans and help make the people who have suffered and lost funds over the last year, make them whole, it could do so. It's choosing not to do so. Barry Silbert is choosing not to do so.
Well, Barry said that there was a daisy chain of risk back in 2021, and turned out he knew what he was talking about. So
he's at the end of the daisy chain.
He's at the end of the daisy chain. Hopefully that's the end of the daisy chain. It's been a wild couple of years of interconnectedness, leverage, and contagion. And it's kind of leads to the big dogs, so the Genesises of the world and DCG. And we're still seeing it play out. I have to say, like, DCG says that lawsuits without merit, they haven't been proven guilty of any of these things. We're just kind of sharing what was publicly available information. We're going to let the courts kind of decide these things. But certainly there's some shady intercompany loans going on, some conflicts of interests. The incentives there just seem like not good in terms of perpetrating these more shady behaviors. And I just, we'll see what happens from it. I want to thank you so much for joining us. If you could like leave the listeners with maybe like one lesson or two that you think they should take away from this whole debacle. Maybe that's a good way for us to end it.
I have three key takeaways from this debacle. One is the SEC creates really bad incentives in the market by not allowing an ETF to be created, not giving a safe mechanism for retail investors to get exposure to Bitcoin. They created this huge premium on GBTC, and that ended up creating these, massive misalignments in the market. The second takeaway is that leverage kills. The premium trade would not have killed so many institutions if they'd done it without leverage. The fact that Three Arrows Capital was borrowing from Genesis to turbocharge this trade was part of the reason why they failed. And my third takeaway is there's been a massive failure in the financial media to really cover this and the FTX case, and to just believe, to be so credulous to believe some of the statements coming from the CEOs without really pressing them. I think the media has failed as an institution in this financial space, especially in the kind of crypto space. We need to get away from a media which really celebrates access journalism, and all they care about is getting the interview, as opposed to asking the questions that will help protect the public in general.
100%. The fourth takeaway I'd just say is self-custody your Bitcoin.
Yeah.
If this all felt like if this all felt like a huge web and confused you, well, guess what? You didn't have to worry about any of it if you just self-custodied your Bitcoin. All these paper Bitcoin products and leverage. If you just hold spot Bitcoin, there's no counterparty risk. You don't have to trust a Genesis to handle your Bitcoin. And that's why we kind of advocate for that so much, because that's kind of a key part of Bitcoin's value proposition is self-custody. Well, DJ, thank you so much. This was really fun. Great having you back on the show. And if people want to follow your work, where can they find you?
Twitter is probably the best place. That's where you'll find this long thread that I did on DCG and Genesis and the fraud that happened. It's real_Vijay on Twitter.
Yep, and we'll probably throw that thread in the show notes for everyone if they want to check it out. Thanks for sharing your expertise, and you have yourself a wonderful rest of your birthday, my friend. Thanks again for coming on Swan Signal Live.
Thanks, Sam. Great seeing you.
Well, guys, there you have it. It's going to be interesting to see how that plays out. I would just keep your eyes on DCG, keep it on the court developments there, because it's going to be interesting to see how that impacts the conversion of the GBTC into a spot Bitcoin ETF, and who will be in control of those over 600,000 Bitcoin. Maybe next year it'll be somebody different. So thanks again for Vijay for coming on the show. And thank you to all you guys who tuned in and listened. Like, comment, post. Let me know how I can improve and what guests you want to come on the show next. Always appreciate to have you guys here. And lastly, this is your last chance over the next couple months to lock in these early bird tickets for Pacific Bitcoin 2024. You can get a full refund by February, so there's not much risk to doing it now. If you think you might go, lock in those cheap prices now. It was an amazing time out in Santa Monica in October. Why not go hang out with a bunch of Bitcoiners? Pacific Bitcoin Festival 2024. Check it out. Go to the QR code. And that's it for this show. Thank you. Thanks for listening to Swan Signal Live.